Good morning to everybody. I've been coming to see Namibia on and off for a couple of years, and some other parts of the world, and I've got a theory on you that I want to sort of test with you this morning and see if you can buy some of it. You hear me well at the back there? Right. As I was putting this together, I came across an assessment drafted in 1989, aptly, because we're going to talk about the Falklands a bit this morning too, by an Argentinian military officer on the strategic importance of the South Atlantic. And he described this as an area of great strategic value with few land masses, and for that reason the ones present have great value in support of military operations. And he went on to show how the chief sea routes between the Indian and the Atlantic Oceans and the Pacific and the Atlantic Oceans run in a band between the 50th and the 60th parallels south through the Drake Passage off the coast of South America, and then off the Cape of Good Hope, where the passage narrows markedly. Sorry. Hello. Is that better? Did you miss the critical opening? Or we're talking about an Argentinian. He was a military officer in 1989. Said the South Atlantic is a really important place. And he goes on to talk about the fact that the sea passages between the Indian and the Atlantic and the Pacific and the Atlantic run in these narrow straits, the Drake Passage off South America and the Cape of Good Hope, where the sea passage narrows markedly because of ice off the Antarctic. And he makes the point then that if there were ever difficulties with the Suez or Panama canals, whoever controls these passages will have great influence over the balance of global bulk commodity trading. If you add to that the ability to patrol the northern access to the South Atlantic, with the strait between Africa and South America narrows to some 3,000 kilometers, that influence is very much further enhanced. Now for China, influence over these passages is the logical extension of its string of pearls, what's called, they didn't call it that, the string of pearls strategy, which is to establish bases along the sea lanes that extend west off the Chinese mainland towards the Horn of Africa, culminating now in the PLA base at Djibouti, which guards the entrance to the Suez Canal, and eastward towards the Pacific, now seemingly through the Solomon Islands. But despite China's efforts at port infrastructure investments in the Mediterranean that go now through Greece and Italy and Haifa, there's even something quite important going on. The Mediterranean presents a choke point of sorts for the string of pearls strategy. And that's a vulnerability probably best addressed, if you were a Chinese strategist, by coming down the East African coast, around the Cape and up the west coast, down that Indian Ocean rim, back up the west coast, and find a base on the Atlantic to mirror that at Djibouti, and at the same time look for something similar on the South American coast. And you would be following that Argentinian officer's sort of strategic thinking. The implications for Western strategists have been around for a very long time, and most markedly, precisely put in 2015 in an article by Robert O'Brien, who would go on to serve as the National Security Advisor under Donald Trump. He spent some of his university years in Bloemfontein. O'Brien, not Trump. Bloemfontein is the source of many good things in the world. And O'Brien writes that the South Atlantic, while below the radar of most policy makers, has played an outsized role in modern naval history. And he specifically writes on Walvis Bay, dictated, he says, by its strategic importance as a naval station, which is why everyone's tried to get hold of it back to the 1800s, when Britain held it, seized it for a time, to keep that deep water harbour out of the hands of the Kaiser. Now, Brian sets out a really interesting chronology. He starts in the First World War, where the Royal Navy defeated the Imperial German Navy's Pacific Cruiser Squadron under the command of Admiral Graf Maximilian von Spee in the Battle of the Falkland Islands, a victory that prevented Spee from wreaking havoc with Allied merchant shipping in the Atlantic, as he had been able to do in the Pacific. Brian then goes to the next great global conflict, where the first major naval engagement of the Second World War, December of 1939, again in the South Atlantic, where 4 Royal Navy cruisers engaged the German pocket battleship Graf Spee after it had sunk several merchant ships near St. Helena. The German warship was scuttled by its crew after being cornered by the Royal Navy. Later during that war, aircraft operating off Ascension and St. Helena Islands were very influential in curbing German submarine activity in the North Atlantic. From there, it's 1982, and Mrs. Thatcher sends the most powerful naval battle group assembled since the end of the Second World War into the South Atlantic to retake the Falklands from Argentina, where after the nuclear hunter submarine HMS Conqueror had sunk the General Belgrano, Argentina ceases to be a blue water navy of any influence. And it's really from that point on that no one really has the ability, a local actor with the South Atlantic coastline has the ability to be such a navy. Now, Brian ends with the last hot war of the Cold War, where he writes of Fidel Castro's anxiousness that the South Africans operating from Simonstown and also from Walvis Bay might have been able to interrupt the troop and supply ships that are being sent to Angola. And when we met last night, what I said is that now, not far from where we're meeting, there are new diplomatic wrangles about who's going to control the South Atlantic. Last year, the Center for Strategic and International Studies, a Washington think tank, speculated about Chinese efforts to secure a port at Bata in Equatorial Guinea, stating that if China is able to do this, construct such a military port, would mark an important step in the PLA strategy to expand its power projection capabilities. Roughly the same time as the CSIS note went out, the commander of the US Africa Command testified before Congress the most significant threat would be a militarily useful naval facility on the Atlantic coast of Africa. And he went on to explain to the politicians what that meant. He said, not a place to get gas and groceries. I'm talking about a port where they can rearm with munitions and repair naval vessels. Meanwhile, on the other side of the Atlantic earlier this year, and very few people are on this issue, President Xi Jinping and his Argentinian counterpart Alberto Fernandez put out a joint statement that China reaffirms its support for Argentina's demand to exercise full sovereignty over the Malvinas, which is the Falkland Islands. And in response, Britain's then Foreign Secretary, Liz Truss, now the Prime Minister, objected, and she said, we completely reject any questions of sovereignty over the Falklands. So who's going to win this thing? When Thatcher was so provoked, in the words of Mr. O'Brien, she sent the largest naval battle group since the end of the Second World War. Ms. Truss, on the other hand, objected strongly on Twitter. And the point, though, from a Namibian perspective, think from a Namibian perspective, is that regardless of how these clashes in the South Atlantic for this control are going to play out, the territory that you control along your coastline is now one of the most, in my opinion, high-value pieces of geostrategic real estate in the world. And how you leverage that should secure for you significant trade and other concessions from the world's great powers. It's a very, very valuable asset. And you go through many of the others you've got. If you here now people tend to say oil. I'm putting oil at the bottom of my list for this morning because I don't think it's very significant, but I think your other assets are perhaps even more important. So let's stick a bit with this clash of ideologies, this China and the West, the business that's going to play out in Africa as much as anywhere else over the next 20 years. At stake, there are really two assets to fight over. The first is a diplomatic one, and I think the most valuable, and the second is an economic one, which will be extremely useful now given the immediate outlook for the global economy. According to the OECD, Africa's urban population is going to grow by 1 billion people over the next 3 decades, on top of the fact that it already is home to more cities of over 1 million people than Europe and America combined. Absolutely vast concentration of individuals. If you concentrate people in small spaces, you create markets for ideas on the one hand, that's the diplomatic asset, the political asset, and then consumer goods and services on the other. So let's start with the ideas stuff. Africa's got 50 votes on the UN and other global fora. China, incidentally, has suggested that Argentina's claim to the Falklands be referred to the UN for what China's foreign minister called peaceful negotiation. And China can do that with increasing confidence because it's got this confidence in the numbers that it can bring to bear on these debates, a function of its superbly expert diplomacy in emerging markets and strategy. On the back of its rocketing urbanization rates, Africa is now the largest external consumer of Chinese construction expertise in the world. And people concentrated in urban locations will access the data via which their political ideas are shaped from the people who provide and control the infrastructure through which that data is transmitted. That's the first asset at stake here. The second one is a more economic one. The urbanization rates matched with Africa's per capita incomes mean that the continent now presents a fast-growing consumer market, a new one, during a period of anticipated global slowdown. And the size is impressive. Your immediate neighbors, South Africa, Malawi, Botswana, Zambia, Zimbabwe, Angola, and the DRC, are home to a collective population 2/3 of the size of that of South America, and one that is growing twice as fast, according to World Bank data. So if you're able to have some influence over the sea passages and the ports, and from that the transport hubs along the ground and the like, and the data that flows from these, you have the infrastructure, you have a hell of an asset for your own domestic manufacturing economy at a moment when economists know it's a bit flat. And Namibia on infrastructure has got great advantages that you could effectively exploit. The first is that you're not a greenfield project where you've got to hack your way through the jungle with a machete to get here. Your roads good, your air travel's good, the data stuff's absolutely amazing to see what you've got here. It just needs to be expanded a bit to meet demand. Secondly, your assets, and there's sometimes government discomfort here in my experience, but South Africa's infrastructure is fading, and the costs of repairing it are going to become exorbitant because it's being destroyed, parts of it. And the political pitfalls of trying to do that are going to remain significant. And that is obviously a great frustration for South African businesses on the one hand, but much more important for any business trying to trade with the continent through South Africa. Your opportunity there is obvious. The third point, your strength related to the second, is that your geography lends itself to the construction of ground transport infrastructure into Southern Africa to a greater extent than approaches from the east. It's just easier to do it here. And the potential gains are immense. You all know these things, but China-Africa Research Initiative at Johns Hopkins suggests that dollar-denominated trade volumes have increased tenfold between China and Africa over the past 20 years. And the European Commission is always quick when you talk about China and Africa trade to make the point that the EU remains Africa's most important trading partner, its largest export market ahead of China, India, and the US. And European trade officials now maintain that the EU trades with Africa 1.5 times as much as with Latin America and twice as much as with Japan. Now, from again a narrow Namibian perspective, the fact that people are arguing about who trades with Africa the most is a fantastic opportunity to exploit if you play your sort of foreign affairs strategy correctly. From the infrastructure point, I'm take you back to South Africa again, because the fading infrastructure is symptomatic of a broader decline. Its global competitiveness ranking as an investment destination has fallen from 30 to over 60 over the past decade and a bit. That measures how well you do as a sort of receiving destination for investment. Business confidence is at historic lows, and polling I did recently with a great new group called the Social Research Foundation that I sit on the board of, shows that half of South Africa's top skills are actively considering immigration at the moment, and that's across every kind of political and ideological and related part of the spectrum. For South Africa to come right, it needs to do a lot of things, and there is a prospect now of a reform coalition government in the next decade. That's actually not implausible at all, but it's going to take time to repair damage. And the hard ceiling on South Africa's investment is that my firm estimates that for the country to have the energy to compete with emerging market growth norms, we need to add 75%, the quantum equivalent to 75% of the amount of electricity we produce today to the grid in the next decade. And there isn't a plan capable of doing that. Plans that are there aren't. I mean, some have some merit, but they can't do anything like this. Which means, as South Africa's neighbour, that your neighbour is no longer able to sustain, let alone expand by much, the investment it already holds. It's not a question of taking it away from them, just can't cling on to the stuff. And this is a dilemma for any major firm with interests in the sub-region. South Africa was the de facto place to go and domicile your company. You have no choice but to stick in the region, given the consumer data alone that I've quoted for you, many companies. So it remains an essential market. ESG concerns and the like make it bigger brand risk than ever before to go and set up shop in a fundamentally undemocratic society. And more than 20, we'll get to this a bit later, more than 20 African states now play host to internal armed conflicts, about half to a third of these involving the Islamic State. So from a security perspective, they're problems. So where are you going to go if you want to be here? I'm going to deal with all of these security things, the jihadism and the sub-region, all of that in a moment. Safe to say that none of these problems apply to you here in Namibia. And your ability to domicile companies and attract skills is therefore very great. And that sense that we shouldn't really compete too harshly with some of our regional partners. I mean, you can see it the other way too, that if you don't, the skills are going to be lost to the continent. They're going to go to America and Asia and Europe and the Middle East. So you'd be doing the region and the continent a great favor by trying to draw some of these groups in. And you don't need to do a lot of that for the impact here to be immense. Your budget is 70 billion Namibian dollars, 4 or 5 billion American, 6% equivalent of South Africa's annual receipts from corporate income tax and VAT. If you take 10%, just on paper, 10% of corporate activity out of South Africa, and domicile it here with the skills, the effect will be that you at least double your annual tax receipts. You probably triple them. And you trigger a construction and spending boom that will drive your unemployment rate, which we're going to talk about later, almost very soon, down to near zero. And you're doing the continent and the region a great favor. Your population comes next because it flows nicely from the employment question. 2.5 million people, 1.6 million of these are of working age, which means they're 15 to 64 years old. 2.5, 1.6 million working age. 700,000 have a job, 350,000 are technically unemployed. And that gives you a labour absorption rate of 40%. This is the rate that measures what share of the working age population has a job. And that 40% figure is low. The African average is 57, the global average is 55. But you have a very high labour participation rate. This is what share of people of working age are employed, same as the absorption rate, or looking for work. But they're in the market, they're participants. Your rate there is 65%, which is on the global average. Now, if you've got a low absorption rate and a high participation rate, you obviously have a problem of a high unemployment rate, in your case 35%, which is perhaps a bit low given the exaggerated contribution of agricultural employment to your jobs numbers. But the net number of people unemployed is very low, the 300,000. Growth rates of 4 or 5% for 15 years should knock your unemployment rate down to sub 10%. And as you look into Namibia's long-term future, I don't think your labour market problem is an unemployment problem. I think if you tap even some of the great opportunities available to you, you're going to run into a labour supply problem, which is going to take very deft migration policy to alleviate in an era where, build a wall is popular everywhere. Too many places. So let's go back to the South Atlantic thing and the clash between these great powers. And Namibia with 2.5 million people sort of in the middle of it, but I think with disproportionate potential to influence these things. One of the factors that's going to become important in that clash is your standing, fairly unique in Africa, as a fundamentally free, open, safe and democratic society. That same 1989 Argentinian military officer, in his interesting report, quotes Eisenhower speaking in 1940, where he says that the American people, 1940 of course, still believed that the distance factor established an adequate isolation between ourselves and conflict existing in Europe and Asia. Only few people understood the direct relationship between prosperity in America and their physical security on the one hand and the existence on the other of a free world beyond our shores. In the World Press Freedom Index, these indices are fine, they're interesting. You rank this year 18th most free press in the world. Canada is 19th. You beat them. South Africa is at 35 and hanging on. Namibia, Botswana is at 95, Zimbabwe is at 135. In terms of politics, Freedom House ranks Namibia as a free society. It's one of only 4 so ranked on continental Africa and one of less than 20 with that ranking outside of Western Europe and North America. And they give you a lot of strong scores on all manner of things that political. Looks good. And this makes you, a particularly attractive option in the region for firms out of the free world, subject now to the vagaries of ESG reporting, the consequences of falling foul of things like the American Foreign Corrupt Practices Act and similar statutes in Europe, whilst for Western diplomats who understand what Eisenhower was getting at, Namibia's partnership surely now presents an exceptionally rare and desperately needed opportunity. You've got the further advantage. Annika's right, you feel better as this goes on. Namibia is a fairly safe society. World Bank data suggests your murder rate has halved over the past 3 decades. It's now at the level of that the United States was at in 1990. If you think coming to Africa is a dangerous thing, the American Centers for Disease Control suggests that your murder rate is now on a par with the homicide mortality rates of Missouri, Arkansas, Kentucky, and Tennessee. From a regional perspective, it's a third the murder rate of that in South Africa, and the roughly 300 murders committed here annually pale compared to the 15,000 in South Africa, a tally which this year will include that of a German tourist shot to death virtually at the gates of the Kruger Park in an area where the tourism industry have been pleading with the South African government to deal with criminal mayhem in exactly the area where that unfortunate German was murdered. Then you get to weather, and you've got to go somewhere, so I'll put it in here. You have a nice climate, a comfortable climate, free from terrible weather events. This is not insignificant if you're seeking to attract top people who need to leave where they were born and grew up and what they're accustomed to do long stints in other parts of the world. And lastly, in terms of sort of political and security view, you are well insulated against the threats of war, terrorism, but particularly the sweeping jihadism across much of Africa, which has become ever more pronounced as extremist groups were displaced out of the Middle East. According to the European Union Institute for Security Studies, Africa experienced 25 state-based armed conflicts in 2019, the highest number since 1946. Of these, I quote these chaps, 9 involved groups affiliated to the Islamic State, which the European Security Studies group judged were responsible for 56% of violence targeting civilians on the continent during the year. And they go on, write quite frightening stuff, that violent extremism, religious inspired, what they call the nexus between Salafi jihadism and violence, continues sweeping across the continent despite efforts at counter-extremism and other prevention strategies. Their South African namesake, with no formal relation, the South African Institute of Security Studies has recently described Africa as the global epicenter of terrorism in the world, and suggested that the continent now accounts for up to half of global deaths from terrorism. You can measure these things. There's a global terrorism index, which is a composite measure weighted over 5 years and made up of incidents of terrorism, fatalities from terrorism, injuries and property damage. And that judges the extent of the threat in a country or region. And the scores now for Mali, Nigeria, Chad, DRC, Kenya and Mozambique are rivaling those of Yemen, Iraq, Iran, Egypt and Pakistan. Now you also have a score on that index. It's 0. It's a very important distinguishing feature on the continent, and it is an increasingly rare one. It's a little subsect of the security thinking is this extremism stuff, and on various other measures, fragile state indices and the like. You guys look really good. I mean, on that one, fragile states index, you are 20 places ahead of both South Africa and Kenya in the global rankings. And because I don't think on this stuff alone, Namibia's outlook is very good. And we haven't yet said oil, which I leave to the end, because otherwise it blinds people, and all this stuff, which is actually more important, I think, pales in comparison. The finds by Shell and Total, you are here, you know what they're about. Your local Cirrus chaps who are exceptionally good. You know, I see a few groups around the world. These are as good as anything you're going to find anywhere in the world. They show that even a minimum viable find of 250 million barrels at a low price of $60 a barrel will see total project revenue of 15 billion American dollars over the life of the project, which compares, they do the comparison to Namibia's 2021 GDP of 11.5 billion. But we all know that the find could be much bigger than that. Cirrus guys then looked, well, they helped me with this yesterday. What happens if we're talking about a really big find? Let's say 3 billion barrels. Leave the price at $60. Assume extraction costs of $40 a barrel and the corporate tax rate of 35%. Then the Cirrus estimate is that you could generate tax revenues of 300 billion Namibian dollars over the life of the project. So let's say that's a 20-year life. Those revenues will raise your annual tax revenues by 25%. Take the oil price up to $100 a barrel, and that lifts your annual revenues is well over 50%. And this is before you talk about just attracting a little bit of that services industry domiciling that would naturally previously have gone to South Africa. The threats of oil, I mean, there's the immediate technical stuff that, you imagine someone knows how to solve, and then there are the policy challenges, which are really up to the administration here, and there's the hostility of Western financed activists on oil. But beyond that, the only real threat to that oil find will be that battery or mechanical storage technology makes green energy a viable baseload alternative before you've been able to tap a significant proportion of what you've got over here. So at the end, I tried to sort of find a way to bring this together. What does it mean? Your per capita GDP in US dollars has now gone to 5,000. These are dollars. And at which point you now have an equivalent, your figure is equivalent to roughly 40% of the global average. But in 1980, when your figure was $2,000, it was on par with the global average. The shrinkage relates in the main to the extraordinary growth rates of China, India, and the Asian tiger economies over the intervening 40 years. They just got ahead of you. And in doing so, propelled billions of people out of poverty and into relative prosperity. But those are rates of growth that are now in reach for you easily via a whole number of different routes. You can even leave some of these things on the side and you're going to be able to get there. And if you do that, it shouldn't be that difficult, actually, to, within a generation, put Namibia on a comparable GDP per capita figure to that of somewhere like Malaysia today. And, well, this is the sort of thesis on you that I've developed. I enjoy presenting. To catches some people by surprise. I'd like to take it on the road a bit more and talk to some others. And thank Roland for having me here. Thank your stock exchange, who actually got me here initially to